Hello everyone and welcome to the Starship Enterprise. I've always wanted to say that. I was once actually a junior officer in the Royal Australian Navy, and I was about to be transferred to the USS Enterprise in the middle of the Indian Ocean. And about 3 days before my transfer, which would have been for 3 weeks, something happened and they weren't allowed to have any foreigners on their warships. So that was a big opportunity missed there. But there's still plenty of opportunities in markets. Now today in Australia, we've just had retail sales confirmed at 1.8%. If you think you've seen this chart before, you have. I sent it out when it was a preliminary estimate at down 1.8% in July for Australian retail sales, and it most certainly is. It's been confirmed as that. We all know there's lots of cracks in the Australian economy at the moment given the lockdowns. We all know that retail sales fall when states go into lockdown. It's a little bit difficult. In the previous COVID wave though, we did see a lot of consumer activity online. Not seeing that so much this time because people have already bought everything they wanted to buy for their home, etc. On that occasion, and they don't need to update again just so soon. So we're not going to see the same sort of consumer behaviour and immediate rebound that we saw on the last occasion, and I think that's something to bear in mind. Other economic data in the Asian region today, and remember I am Australian, therefore I am Asian, was for Japan, which was the Orjibun Bank Japan Services PMI, apologies for pronunciation, which came in at 47.4, but I wanted to show you this chart because I think it's indicative of much of the world, the pattern we will see going forward. For the United States, it's a little bit better than this. For Australia, it's a little bit better again. But I think for most of the world, we're going to see this sort of chart pattern. And what I'm highlighting here is we've had this great recovery phase, and now we're starting to see normal style economic volatility for economic data series. And remember, any economic number is only an approximation, a survey, a sample survey of what is going on in that sector, and it isn't the absolute what's happening in the real world. It's just a guide to the real world, and the guide to the overall world at the moment really is on a slightly lower level than it was pre-COVID, and I think that's the important point to think about in terms of the global growth outlook at this point. In the US, of course, we saw some data there. The economic optimism index in the US, again, sort of showing that rolling over pattern that I've been highlighting for many months, even before it started, and now it's certainly self-evident in the economic data. Again, it's still a reasonably good number, but it's just a little bit on the softening sort of trend process way. Also, with factory orders in the United States today, an okay number, a modest number. If we look at the longer term chart, you'll see exactly the same pattern as we just saw for Japan, that Japan series there. But for the US, it's just barely slightly higher at the moment because we know the US economy has got back to about where it was before COVID, maybe a little bit higher, but it has some sectors that are very, very soft. And employment is still not as rosy in the United States as perhaps it could be. Moving to markets now, the NASDAQ did one of those get out of jail immediate miraculous recoveries, sort of a rabbit out of the hat experience, where the market was falling away sharply. People who thought we could be in for a big correction started to get excited. I won't say who that is. And then you get this miraculous rebound that just comes out of nowhere. And I do think that's just foreign buying, big global funds overseas starting to buy more Australian assets, and individuals as well, or just a big order hits the market and then everyone tries to justify it afterwards with the fundamental and economic reasons for why that happened, but really big order to sell, big order to buy. Sometimes economic data is a catalyst, or news on COVID or Delta, etc. And sometimes there's no catalyst and you still see similar sort of price action. So it's all very difficult and challenging, but you would have to say that on the day there is some immediate upward momentum there for the NASDAQ. And really that's the pattern for all the stock markets around major indices on the day, so there's no need to go through all of them. Perhaps though, just quickly looking at the Australian market, it's really trying to push the upside here, but there's not that much great local news for the Australian market, and I think people are just looking a little bit too far ahead at the moment in terms of seeing us come out of lockdown and the economy to boom again. Led to believe that partly by RBA comments yesterday, statement yesterday, but I don't think that will be the case. Looking now at the euro a little bit, again a little bit of room to the upside, which we'll see in the Australian dollar in a moment, a little bit of room to the upside, but it's within a range. I'm still thinking the US dollar is going to be strong for the same reasons I just spoke about the US stock buying. That is, a lot of funds around the world, a lot of people around the world really see the United States as a little bit of a safe haven bet as it hits 70% vaccination rates. But interestingly, hitting 70% vaccination rates, the same time it's having its highest ever new case numbers, even higher than the first wave, daily new case numbers. And last but not least, I wanted to show you Bitcoin. Bitcoin is really under pressure. It's struggling because of the beating of the drums of regulation that's currently going on in the United States. The SEC is asking for more funds, more powers, more legislation to fully regulate the crypto space. And a lot of people have been getting away with an awful lot of false claims in the crypto space, so that might be quite a good thing for the world. It may not be such a good thing for cryptocurrencies in general and Bitcoin. That's about it from me for today. I guess the general thrust is this. The US dollar is having a little bit of a pullback. The Australian dollar is really trying to push ahead. Still on the back of some of the RBA outlook comments in their statement yesterday. Other currencies like the euro and the sterling having a bounce. Euro particularly having a bounce within its range, but still overall vulnerable to US dollar strength, I think. And the Aussie dollar rally will be a sell, but whether it's here or it's 7.425 or maybe even a little bit higher is difficult to say at this point. I still think oil is topping out in a big way. I still think gold is a great long-term buy. And I still feel that stock markets are in a state of flux, torn between a lot of US fund managers actually see valuations as too high, but the price action remains bullish. Again, I think it's because of that overseas inflow of capital, which is really, for the rest of the world, it's almost like a risk-off trade to be buying stocks in the US. And so it's a kind of a bizarre situation where risk-off in the minds of the rest of the world could see US stocks continuing to gain ground. Be careful and watch for any signs of sharp reversal. They're not really there yet, and lately when they tend to happen, they tend to be defeated very quickly by fresh buying. So it's an ongoing process, but the new highs become more and more gradual, and I think that is a seed of concern that we all should pay attention to. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities.